Morning, Fractal Effects team. Before we get started, please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Just going to jump onto the charts now. Been tracking the market from the early session. So usually we would not be trading today. We're just going to go over some educational stuff, but we are going to track NAS. This is non-farm payroll week, one of those weeks you want to avoid. We also have July 4th coming up on Friday. So we had a slight upside expansion model. We had a double break to the upside. That means the market wants to go up first, but we've had no break of the manipulation range on US 500. So this is going to be the asset that literally shows us the hand of which way the market wants to go. We've had no manipulation move here whatsoever. And we manipulated again, up, and then had a double break. What happens after a double break? We wait for a retracement back to one of our key zones. So one of our key zones could be the NWOG. We're sitting in the NWOG. There's your DSD low. There's your NDOG. Not to mention we have not hit the NYC fair value gap. And we have a mixed model sell as well. So this is one of those things where our system kind of prevents any FOMO from happening. One could see this market just climbing and climbing. We just punch past this 15-minute fair value gap, and people want to jump in. They think that the market's going to go right to the DSD high, and it could just shoot up there, but it's given us no proper entry as of yet. The NYC fair value gap has not even been tapped, and US 500 hasn't even manipulated to either side yet. We're already 5 minutes away from spotlight confirmation. We're just going to wait for that confirmation. Now we know from our historical data that after we get that confirmation, there's an 85% chance that the market will retrace back into our dealing range anyways. So if we don't jump in yet, then you can wait for that confirmation in either direction, and then a retracement, and then look for an entry then. Either way, this is not giving me FOMO. I don't care that the market's continuing to go up. This doesn't tell me anything. After the double break, there is going to be a retracement and then an extension. And then that retracement could just cut right through and continue down too. So we want to wait for the proper foothold. That's the only way you can climb a mountain, is with a foothold. Here we go. Finally, we broke the manipulation range on US 500 to the upside. That means that's the fake move right now, unless we get a double break. Then that's the dealer revealing their hand and they want to go up. Now, US 500 going forward will dictate what both of these do. But we just got to wait and see. So if this is a clean MM, meaning a clean manipulation move, what we should get next is a 5M bearish fair value gap. But if we get a double break, meaning we pull back, break the bottom of this candle, the candle that broke the MM range, and top is broken as well, that's a double break. That's the dealer revealing their hand. They want to push up. And then that would be your target, the DSD high. Just got to wait and watch now. Which one do we get first? Again, not getting FOMO. This is where 90% of traders fail. They don't wait for their setup. and they get FOMO and they see the market just shooting up and up. I've seen, and again, I'm not saying that that's what's going to happen today, but I've seen the market get this close to the DSD and then drop and then give us that retracement and then come hit it. Where would you have rather entered? Here, so you can climb right into this, or wait for that drop and then get the entry there and come into the DSD high? Now again, if it doesn't happen, that's fine too. Capital preservation is our primary goal. Sometimes the best trades are the ones you didn't take. This is not everyday trading. This is day trading, but not everyday trading. And again, that's where most traders fail. They think they have to do something every day. I woke up, I got ready, I got in front of my computer. I have to take a trade today. Not realizing that that waiting for the proper setup and staying consistent is more important. That's the person who's going to be profitable at the end of the month. So waiting for that retracement. We're 1 minute away from range formation. And again, 85% chance that we're going to get a retracement after that anyways. Most likely back down to the 20 EMA and the 10 AM fair value gap here. Just got to wait and see. Stay patient. Let's see if we get a confirmation here. Another thing that could happen, remember, once you get a double break, as mentioned before, it's only a specific model until it's not. A double break should get you to the DSD. Doesn't mean that it can't. Once it's hit that DSD midpoint, you can technically say it's delivered. The DSD is a powerful, powerful zone that the market rejects. So if we hit the DSD high, consequence encroachment here, and then on US 500, we set up for a bearish fair value gap. That means both of these probably want to drop. That's why I'm only looking at US 500 now to dictate where they both go. We're either going to get a double break here, and they're going to both push up, or we're going to get a 5M bearish fair value gap tapped, and then a 1M bearish fair value gap tapped, and they both likely want to drop back into this 4-hour fair value gap down here. Just got to stay patient. When you have that many set of rules, it's hard to get FOMO. When you know you have to wait for this, and this, and all of those points of confluence have to match up and be giving you the same directional bias, it's actually very calming. That's what makes it more like a career and less like just jumping in like a retail trader, dumb money as they call it, trying to scalp and trying to make a couple of bucks. This is how you take it seriously. You don't trade on specific days. You don't trade at specific times. You wait. Remember, we're bouncing off the DSD low here too. So if the market, if US 500 has a tough time getting past this point and sets us up for the 5M bearish fair value gap, then you know this thing is pushing down. I'd like to see, if we're going to push down and get that 5M bearish fair value gap, I'd like to see NAS actually just hit the midpoint of that DSD first. That's a very, very powerful rejection point. And then they both set up to go short. So we have a mixed model though. Not only do we have we had an upside expansion model from Asia to London, and then we have more of a contraction model. A trumpet model where London is sitting inside NAS. When you see a model like that, the market wants to sweep both sides. And we have a mixed model sell. You don't want to see a lot of mixed models. We want all the confluence heading in the same direction. So we do have our confirmation now. We have a bullish confirmation. That means we can't even sell. So if this sets up for a 5M bearish fair value gap, we actually can't take it. We're not allowed to sell this market now. So you got to hope that you get a double break here instead of a 5M bearish fair value gap. That will stick with the bias that this thing actually wants to go up. But still, we need a retracement. We need a proper retracement back into this zone. I want to see a 5M bearish fair value gap created first. But I'm hoping for that double break now from US 500. I cannot buy this market. I cannot sell this market. I cannot sell either of these markets now. If you ever take a loss following your rules, that's just a business expense. That's how you got to look at it. If you take a loss not following your rules, that's your fault. That means you took unnecessary risk. Yeah, no one to blame but yourself. Still no FOMO. Again, none of this matters to me. Did not give us a foothold. Look at all these 5M bullish fair value gaps that were created and not tapped. What does that tell you? It tells you that the market does not want you to get in. A fair value gap means fair value has not been delivered. It's just continuing to push up. It has to come back to deliver fair value for anybody who did not get in. And again, they're muddying up the waters even more. We've now hit the DSD high, a powerful rejection point. This should create that retracement we're looking for. Get rid of this since we've already gone 100, taken out London highs. But do you see how that's delivered? As soon as we had a double break to the upside, that was the dealer revealing their hand. I wanted to get a good foothold to take that entry into the DSD high, but it took off without us. When you get a double break, there is a 80% chance that the market will continue pushing in that direction, but with a retracement first. And obviously on a higher time frame, you want nothing in your way. You don't want a 4-hour fair value gap or a daily fair value gap in your way, because it could reject off of that. But I'd like to see the market retrace back into this zone. I want to see it touch the 20 EMA. We're following specifically just the spotlight rules now. That's another 4-hour high right here, this green line. And then there's your previous day's high. So even though the indicator paints out previous day high low with the yellow line, I like to drop in a thicker yellow line just for my own sake sometimes, so I visually know where it is. But the indicator gives you all the levels you need. Shows you previous day high low. It shows you where the new day opening gap is. Shows you how big it is, depending on which broker you're looking at. It's going to show up differently on different brokers. Shows you where the new week opening gap is. Shows you where true day open is. That's the actual open at midnight New York time. There it is, true day open. Just want to check, is it under there? What color do I have set up for it? I guess I had it set in, make it so it's right there in the dotted line now, you can see it. So again, this market continuing to push up, but no retracement as of yet. I'd like to catch it from here into the DSD high. Have we had a double break yet here? Let's take a look. There's your manipulation move. This candle here broke the manipulation range. No pullback yet, no double break yet. I want to see it come back down and touch the 20 EMA. And see if it gives us a possible entry. And it's got to do all of that by 11:30 Eastern Standard. Otherwise, we're done for the day. Simple as that. Stick to your rules. If you're in the market longer than 2 hours, and I only say 2 hours because there's two different strategies here. One that goes from New York open to 10:30, and then the other one that goes from 10:30 to 11:30. Usually people only follow one strategy, but if you want to follow them both, you're in the market for couple of hours. If you're in the market for longer than that, you're wasting your time. If you have not found a trade setup, then that means one, it's not that obvious. They've muddied up the waters. They're engineering new liquidity, and you're better off staying out anyways. So all of that has to happen. All your points of confluence, your checklist has to happen within that window of opportunity. Remember, guys, other people teach strategies. That's not what Fractal Effects is. This is a market translator. This is letting you know what the market is doing. Is it manipulating? Is it driving down? Has it hit a major rejection point? This level does not exist on any other indicator, I promise you. This is not a time lagging indicator. This is showing you current data. This zone was painted out by 8:30 a.m., if not earlier. This is dictating what the market's going to do next and where it's heading. US 500 still continuing to push up. Again, this is a runaway market, guys. Look, it's not tapping any of these 5M fair value gaps. You can't get FOMO when you're not getting a foothold entry. Can't climb a mountain without a foothold. There's an 85% chance historically. Remember, algorithms repeat. There's an 85% chance that the market will retrace back into our dealing range once we have a confirmation. And there you go. There's your retracement. It's at least setting up for it. Let's see what it looks like. This isn't the be-all, end-all either. We've also had our double break. Now we got to proceed with caution because NAS has hit the DSD high. This is the major rejection point. We didn't hit the midpoint, so that's good. That means maybe we can get our retracement, and then I want to see a 5M bullish fair value gap created, and that could be our foothold. This is bouncing off the blue zone, so we got to be careful that it's not a short retracement. I'd like to see it hit the 20 EMA since we have not touched it. We haven't touched it since down here. That was before the crossover. So I want to see a little bit of a deeper retracement. I want to see it hit this 20. But again, they're both at the blue zone. Blue zone's another rejection point, so it could technically turn around here, but as mentioned before, that's not a proper setup. Make sure everything on your checklist is check before entering a trade. That's the only way you prevent feeling guilty later in life. I take the same path to work every morning and then suddenly deviate one day and I get into a car accident. Who do I blame? I want to see a 5M bearish fair value gap created. And then I want to see what happens after that. This one already closed it off. So if this gives us an immediate rebalancing candle, then I'm not interested in taking it from here. There's no room. This was my target for the day. Here. There's previous day's high, sure, but that's the low-hanging fruit, the 4-hour high. Three minutes left. And you can expect this kind of muddied up price action on this week. We had Fed Chair Powell speaking yesterday. We have non-farm payroll, and you have July 4th, all this week. So expect this kind of price action. Expect these kinds of moves. This is not a proper retracement in my mind. For proper retracement, I need to see a bearish fair value gap created first. So let them do what they're going to do here. I'm not interested. We've already hit the DSD high consequence encroachment. So the DSD high on NAS is lining up with London, the London opening gap. But as you can see, we're still having a tough time getting past the DSD low on US 500. A lot of divergence today. Also remember, a true double break breaks the top first, then the bottom, then the top again of the previous candle in the 5M. It's not what we've had. Good way to know that that's exactly what happened is usually the breaking candle or the double breaking candle is the same color of the direction you're going. So if this was a green candle, that would let us know that the top was broken first, the bottom was broken first and then the top. But that's not what happened here. We had the top break first and we closed bearish. So this is not a true double breaking candle yet. But if this candle takes out this top, there's your double break. Still not interested. There's nothing here. The market could reject off the DSD high. There's your 4-hour fair value gap, 4-hour high. So if my points are hit before I get a decent entry, then that's it. I'm done for the day. So NAS is technically delivered. So just to recap, we had a double break to the upside. That's the dealer revealing their hand. The market wants to push up first. But once it hits that zone, DSD high, and takes out London high, it's delivered. So that was the dealer revealing their hand. It's already delivered. It's done. Can it go higher? Sure, but I'm not interested in trying to see and follow this market up to previous day high. I just wanted to aim for the low-hanging fruit. And we have not touched the 20 EMA, so I'm not interested in jumping in for the spotlight strategy as of yet. There's your true double break now. I believe it just broke. Did it? Let's see. Nope, not yet. I'd like to see it go over that first. Also keep in mind, if you're using, there you go, that's your double break. If you're using a diverging pair, and one of your assets hits your TP, whatever it was going to be, let's say it was going to be previous day high, if one of them hits the TP, you got to act as if both of them hit the TP. Because as soon as one of them hits that target, that means it's done. It could reverse, and taking the other one with it. So previous day's high on NAS lines up pretty well with the DSD high on US 500. You will always find, that's the other thing that this indicator is doing. I don't even like calling it an indicator, but technically that's what it is, but I don't like being compared to other indicators since they're all time lagging data. But the one thing that the blue zone indicator shows you are those points. They will match up. They're just going to be different points. But it's the perfect indicator to use for divergence. Every time you see this thing hit a point, you will see this one hit a point. It'll be a different point, but it'll show you. Still looking for a decent retracement. Let's see if we get one. I want to touch this 20 EMA before I go anywhere. Maybe he'll give us that. Still got a little over 30 minutes left. You have to have the right mindset for trading. This isn't for everybody. If you're an emotional person, you're probably not going to make a good trader. That's just the honest truth. You have to be able to control your emotions. Meditation is huge. Successful traders usually meditate. They're able to control their emotions, your cortisol levels. We actually have a great post about that on our Instagram, Fractal.Effects. That's our handle across all social media. But when your cortisol levels are elevated and your heart rate is elevated, you're not doing this right. That means you're either over leveraged and you got a bad entry. Why'd you get a bad entry? Because you didn't follow your rules. Why didn't you follow your rules? Because you got FOMO. Because your emotions took over. This is not made for emotional people. I've said it before. If this feels like you're watching paint dry, then you're doing it right. You should have no emotion at all when you're trading. Is that easy? No, not at all. I can't tell you how long it took for me to get into that mindset. A couple of years, actually. You know, most traders will tell you that they've blown out a couple of accounts, and or it took them a while to master that. But that's what it boils down to. So I'm still waiting for a 5M bearish fair value gap to be created. I cannot sell this market. We have a confirmation to the upside, bullish confirmation, and we have a double break from both assets. Now NAS 100 has hit the DSD high, but the fact that US 500 has not gives me hope that NAS wants to get up to here, because that lines up. The DST high lines up with previous day's high for NAS. But I want to see a proper retracement first. I want to see a 5M bearish fair value gap created. I want to see it maybe hit this 20 EMA, maybe even lower. And then I want to see a 5M bullish fair value gap created and tapped, and so on and so on. That's why they call us fractal effects. It has to make sense on multiple time frames, on the 4 hour, on the 5 minute, on the 1 minute. Those are our three primary time frames that we look at for our strategies, be it our swing trading high time frame strategies or our low day trading scalping strategies. But we teach you all of it. And on days when you can't find a trade setup, jump into our market watch. That's part of your package. This is the cheapest, fastest system you will find on the market. You can learn this in 30 days. Technically, you can learn it on a weekend, and you can master it in 30 days. Just depends on how dedicated you are. And it costs less than a gym membership. Not to mention, this is a great gift to give somebody who's just starting out. College student who wants to learn how the markets actually work. Potential of making some money on the side if they don't have time to actually have a full-time job as they're going to college. Or you got to invest in yourself. This is an investment in yourself. We're officially at 11 o'clock. About 30 minutes left in our stream. I was expecting this kind of day. As mentioned before, I personally do not trade on days like this. A non-farm payroll week, you want to be out, not to mention 4th of July week as well, you want to be out by Tuesday. And this week, Tuesday, we had Fed Chair Powell speaking, so even Tuesday was a bit of a write-off. We did get a decent setup on Bitcoin, which we posted on our TikTok. Again, fractal.effects. Still nothing of interest. Not until I see a 5M bearish fair value gap created. Not to mention NYC fair value gap was never tapped on either of these. That way, that becomes a breakaway gap, meaning the market wants to just continue to run, most likely, but it's also a higher percentage chance that the market will come back and tap it later. Now it's 100, trying to push past the DSD high. I was hoping that would create the retracement I was looking for. On US 500, we're getting a power of 3 setup. A lot of consolidation here. Now remember, with a power of 3, you don't always have to get a manipulation move. You can just get consolidation and an extension, but again, that's not something we're interested in. We're going to assume that the first thing that breaks out of here is a manipulation. So you got 1, 2, 3, 4, 5 candles. You want to see at least 5 candles to count it as a consolidation. NAS, not so much. We're not in a consolidation phase. It's slowly pushing up. So even more divergence. Remember, we can't sell this market. So even though this is a mixed model sell, and there's a potential chance that the market could just crash from here and take out those lows right into the 4-hour fair value gap and the daily fair value gap down here, we can't take that sell. We have too much confluence to the upside, so it's already shut down that opportunity for us. So we're breaking out of this consolidation. This could be a manipulation move. So there goes NAS, taking out the 4-hour highs. Still not interested. I wanted to see a proper retracement down to the 20 EMA. Or if you're a newcomer and you see a setup you haven't seen before, don't trade that day. Watch it play out, make notes. Say you're confused. Hey, I don't know what happens when one asset hits a DSD high or a DSD low and the other one hasn't hit it yet. Then watch it. It's a first time opportunity, make notes. I told you, algorithms repeat. It's not the be all end all. You need to use it with other points of confluence and higher time frames, but I'm saying learn any chance you get. 22 minutes left in our stream. Still want to see a proper push. I'd like to see it hit this 20 EMA and then give us a proper 5M bullish fair value gap. It's the only way I'd be interested in jumping into this market on a day like this, on a week like this. A lot of reasons to avoid it. If we weren't dedicated to this live stream, I would not be trading today. Too much high impact news. You had Fed Chair Powell speaking yesterday, non-farm payroll week, 4th of July. You're going to see a lot of price action like this. So just to recap, we've hit the DSD high. We've hit the 4-hour highs right here. US 500, still roughly consolidating. We have not had a proper retracement after confirmation. We did have a retracement. I like to see it hit the 20 EMA. It has not hit the 20 EMA since we had a crossover, and the NYC fair value gap is a breakaway gap. It never even tapped it. Let's see what US 500 is doing now. So this could have been the manipulation move, and then this could be a distribution down into potentially the NYC fair value gap. Let's see. And it's all got to happen within our window of opportunity in the next 20 minutes, or we're done for the day. Simple as that. Remember, at the beginning, you just want to look for one high probability trade setup a week. As long as you stick to your rules of 1 to 3 risk to reward, that means you're aiming to make 12% a month, risking 1% to make 3. Those are amazing numbers. No bank's going to offer you that, 12% a month. You wish. Here you have an opportunity to make it yourself. But again, learn the rules. Know what you're doing. Know what to look for. That's our goal, is to walk you through this and explain this to you. Let's see if we get that 5M bearish fair value gap that I was looking for and a retracement back to the 20 EMA. I'd like to even take out these lows. Proceed with caution. Just going to mark out the power of 3 to see if it sticks to our rule. That would have been the manipulation. And then a proper distribution really just means taking out these lows. But let's see if it gets all the way down to here. Let's see if that's what we have. Remember, I'm still looking for a entry to go long. I wouldn't be interested in taking this, but this is what I'd like to see. Got about 13 minutes left in our stream. Still nothing of interest yet. So getting that rejection off the DSD, that could create that push down, but this late in the game, I'm not sure it'll give us what we want. But at the same time, remember capital preservation. We don't find a high probability trade setup, we're not interested. Got 2 candles left. Yeah, still not interested. This did not give me the pattern setup that I was looking for. I like to see at least After double break, a 5M bearish fair value gap, which I use as an inverse to step up, and then a 5M bullish fair value gap. Also, we want to see it hit one of our key zones. The blue zone counts. I just wanted a deeper retracement. Even here, we're bouncing technically off the purple zone and the DSD low. Just wasn't much of a deep retracement for me. You never want to get stuck in a late retracement. That's why we wait for it. Let's say for whatever reason you jumped in here, you thought the retracement portion was done, but then the market just drops. This is almost too clean. So this will be our last candle. US 500 is slowly starting to create a 5M fair value gap right there. It's a little too late in the game for us. About 1 minute 39 seconds left in our stream. We've already filled in that 5M bullish fair value gap that was being created. Looks like the market's priming up to push down here. Again, a little too late for us. But this is what I meant by that late retracement. Now, usually consolidation leads to a continuation, but it's usually after a manipulation move. If you don't get that manipulation move, then it's a runaway market. So most likely this will push down. Who knows how deep? Could hit the 20, could come back up, or even go deeper. And then set up possibly in the afternoon. Or even drop off from here. But again, this is past our window of opportunity to find a high probability trade setup. So we will conclude our session there. Please check us out on fractaleffects.com. Please hit the subscribe button, turn on your notifications so you know when we're live. Also check us out across social media at the handle fractal.effects. And we'll be live again tomorrow.